So welcome back everyone to another recap session, right? So let's get started. We had done in the previous session reverse charge mechanism. We have compared reverse charge mechanism to ITC, registration, exemption, and we have looked at first four major industries apart from the earlier discussion that we had. Now we're going to go finish off this RCM cases in full and also look at a net GST computation question which clubs reverse charge mechanism inside it. Okay, I hope you're all excited to learn the entire chapter and then get some really good clarity with respect to something that is going to be tested as your compulsory question. That's one such question I'm going to cover today. So look at case number 5. We are going to jump into government cases and renting of immobile property. We're going to club both of them and then discuss them in detail. Okay. So you need to have, like, a lot of students try to skip this particular area wherein it is they find that this discussion is a little longer, and in chartered accountancy examination or cost accounting examination, you should understand that you should not go out and then have half baked understanding into any area, right? So you're trying to compete at the highest order, you're trying to compete at the highest level, so your clarity also should be to, like, say, you should think that in India I should have the best clarity in a particular area. Put everything else, have all the confusions listed down, take that effort, do it in a very organized manner. So if you're going and asking a question to a faculty also, go ahead and then write down the whole thing. Okay, sir, I've looked at this is my understanding, this is how I am interpreting this, and this is my confusion. There are a lot of students who come back and then give me that kind of doubt. So is my understanding correct? Like, they write down everything in terms of their understanding, so they have done the computational efforts. So do that kind of an effort so that you will understand this end to end. Sometimes what happens is that some students will come back and say that, sir, can you explain me this, and then say, share me a photo. That will be like a 2-page photo, there the whole chapter could be there. So I'm always confused, what is that they're having confusion on? So always be the one that will be doing all the computations, so that when you're asking something also, you can actually reduce the efforts of the faculty, reduce the efforts of your thought process, so you don't have to understand all over again whatever somebody is speaking. Okay, so I'm going to do all the computation for you in terms of understanding this, all the work, all the brain work I'm going to do. I want you to just have your full attention and try to understand end to end. Any confusion, you should come and ask me, right? So let's look at government cases. I'm going to consolidate. So in our notes itself, if you look at, I've separated the structure of our government discussion into a full length chart. I have given a very logical understanding kind of a structure in terms of our notes. So I'm asking you to move to page number 40 if you're having an older edition, or nearby pages if you're having a latest edition of our book, right? So look at the summary chart that I've given. This is what we're going to use for our revision. I would have told at the beginning as well. All right. So if you look at the starting discussion of government and local authority should ideally from section 7, that is from supply chapter. Supply chapter already has an area that is being discussed and then structured. What is that area that we have? They said services by government or local authority can be supply and not a supply in some cases. What is understanding of that? When government or local authority, when government or local authority is actually providing, when government or local authority is actually providing the services, sometimes it's not even treated as a supply. When will that be? So there's a section called section 7 subsection 2. So section 7 subsection 2, we would have called this in our supply discussion as exclusion subsection. In exclusion subsection, you have two clauses. There are two ways in which some activities are excluded from supply, which is clause A and clause B. Clause A primarily talks about something called as negative list. Apart from that, clause B, there is an empowering provision that we have inside our GST. What is this empowering provision basically talks about? It says government can notify activities of government or local authority upon recommendation of GST Council as not a supply. What is it? Government can notify activities of government or local authority upon recommendation of GST Council as not a supply. Means what? If the government wants some of their activity, two people's activity, government and local authority. If you have already watched our amendment discussion or day one of our revision, you would have already understood. Now the local authority discussion is being extended to local and municipal fund also. So wherever that we are using the word local authority, I can apply that. Now, government can notify activities of government or local authority upon recommendation of GST Council as not a supply. The government wants, governments or local authority activity can be declared as not a supply. And how many activities are notified as not a supply under 7(2)(b)? Two activities are there. Number one, activities for function entrusted to Panchayat or municipality under Article 243G, Article 243W. They are saying that 243G, 243W activities of Panchayat or municipality will be treated as not a supply. Second, providing alcoholic liquor license by state government is also not a supply. So only two activities are excluded from supply. What's the impact? If Panchayat or municipality is doing an activity under 243GW, collect some consideration, would that be subject to GST? No. Why? That activity itself is not a supply. Similarly, state government, Tamil Nadu government or Kerala government or Andhra government is giving a alcoholic liquor license to a resto bar, for example, or to a person to sell alcohol. It's a license, it's a service. That is also not treated as a supply because it is notified as excluded from supply. So these are the two activities that we have. Now, how this will be tested in your examination? Example. Now, there are so many activities under 243G, 243W, wherein Constitution says these are the activities where the powers are to be or the responsibilities are entrusted with Panchayat or municipality. They are local authorities, right? So one example would be urban planning, waste management. So I'll give you a classic example. Say Chennai Municipal Corporation. It's a municipality, right? Chennai Municipal Corporation is doing picking up of the waste from each of the restaurant or each of the business unit in Chennai. They are charging 500 rupees for picking up the waste every week. Now, Chennai Municipal Corporation, municipality is doing an activity which is aligned with 243GW function, which is waste management done by Panchayat or municipality. They're collecting consideration. Question. Now, will this be subject to GST? Should this municipality collect 500 plus GST? Can you give me an answer on that? Would that be subject to GST? The answer is no. Why? Because that's not even treated as a supply specifically notified. Similarly, Kerala government is giving a resort in Munnar, Kerala, alcoholic liquor license, monthly license fee is 1 lakh rupees. So this resort is paying every month 1 lakh rupees. About 12 lakh rupees is being paid by one resort to Kerala government for getting an alcoholic liquor license. Question, would that be treated as a supply? Again, the answer is no, it is not a supply. Will that be subject to GST? No, because it's not even a supply. Now, we can also understand by elaborating this further that any activities other than these two, you take any activities other than these two would be considered to be a supply. Then we need to learn that there is some exemption available, there is some RCM. How do you connect everything? So I'm saying let's directly go into a summary chart which is very logical for you to understand. What I'm trying to do here is that all the activities of government other than those two that we have already seen which are not a supply, I'm saying that rest everything. If it's a service, it will be treated as a supply of service. Why? Two things which are not a supply we have already defined. Anything else other than this will automatically will become what? It will become a supply. There is no confusion on that. That's what I've written as point number 2. Hence, because I've already defined what is not a supply, hence I'm saying all other activities of government or local authority other than the above are considered to be a supply of service. Now, I need to know when it is a supply, does that mean immediately it will be subject to GST? That's the next question I ask. Okay, I know that it's a supply. Will that be subject to GST? I'm saying that not necessarily. Some activities under this are a supply, but exempt supply. Some activities are supply and it is a taxable supply. So I can say even after government's activities, even after government's activities have become, even after government's activities have become supply, some of the activities are still considered to be an exempt supply. No GST is applicable. So there's no question of charge when there is an exemption applicable. I've been telling you this word from the previous revision itself. So because charge is basically answering you the question who has to pay the taxes. If tax itself is not attracted, how can I take the taxes? Right? So welfare services and commercial service are the classification I'm giving generally for your logical understanding of government activity. What I'm saying, all other activities other than those two by government or local authority, panchayat, municipality, etc., can be broadly classified into welfare services and commercial services. You think about it, government will provide welfare services. Sometimes they will not collect any money. Sometimes they will collect a nominal fee, 30 rupees, 50 rupees, 100 rupees, right? Question is this, when they provide welfare in nature services, should there be GST applicability or there should not be a GST applicability? Fundamental understanding is that there should not be a GST applicability. So we said, if the services of the government are in welfare nature, who would be the beneficiary or the customer or the recipient of these welfare services? Will the business entity be receiving welfare services from government or public in general? Public in general will be getting it. So I'm saying the services provided by government or local authority to public are welfare in nature. These are generally exempt. I'm trying to do little deviation from the main Bear Act, trying to oversimplify it so that you remember this for your examination. So I'm saying government or local authority providing a supply which are welfare in nature to public would be generally exempt. Now, to who else the government can provide services to? Business entities also. What kind of services? Say giving a license, commercial license, giving a license to do mining. So these are all commercial services in nature. These services are beneficiaries would be whom? The commercial business entities would be the one who will be getting it. Now, my next question would be, should it be generally taxable or generally exempted? We know that welfare services in nature would be generally exempt. Now, commercial services in nature should be generally taxable. So look at the contradiction that you have. Welfare services to public is generally exempt except for some cases which are taxable. But commercial services to business entities are generally taxable except for some exemptions. So it's opposite one. Here, the taxable ones I'll discuss in this discussion itself, but commercial services to business entity which are exempted, I'll talk about it further in our exemption recap. Right? Okay, let's look at this. So welfare services to public, which are generally exempt except for some are taxable. Now commercial services are generally taxable except for some exemption. Next question is charge. I know that to public some taxable services are there. Now you think about it, to public when I'm providing taxable services, can I bring reverse charge to collect the taxes? No. If I bring reverse charge, the one who is liable to pay the taxes will become public. You think about it. Somebody went to the government office and then availed a service and it is taxable by default by this provision. It is taxable. Would it be practically possible to collect the taxes from the customer who is walking into the place and then, walking into the government office and then availing the service? Impossible. I cannot bring reverse charge to an individual or to public who are not having GST registration. That's not the right method to do it. Right? Okay. So because of that reason, we said whenever the services of government are taxable to public, it would be under FCM. However, when it is commercial services and it is provided to business entity, it is always better to collect it from the business entity. So they made it what? Taxable under RCM. Right? Now let's look at what are the services to public which are taxable. Now, there are four services provided by government. When I say government, it could be government, local authority to public, which are taxable. You can see the list here. Number one, services of Department of Post. If you look at postal departments are actually government only, right? Tapal department, postal department, right? So post office department is government, central government it is. Now, when they are providing services, it is considered to be a service provided by government. Unfortunately, it's not entirely exempted. It is actually taxable in some cases. Now, you can see that I've put an asterisk mark to give you an understanding that whenever it is taxable, it will be taxable under FCM because it is taxable to public. However, some of the cases of Department of Post Services are also exempted, not entirely taxable, but some are exempted. Now, I used to even call the exempted services of Department of Post as useless exemptions because most of the services which are exempted are not very popular, age-old services that we do not generally avail. Now, let's look at the understanding of Department of Post in detail. So, I've given you a summary of all these Department of Post understanding, etc., so that you can get the full understanding from this chart itself. Now look at it here. Postal department is providing services. Postal department is providing services. Now, I have written 3 points for your understanding here. Point number one, services by postal departments are taxable under FCM. We have already understood because these services are provided to public and taxable, I can only bring FCM. So when you go to a postal department and avail a taxable service, you will pay to the postal department the supplier with the GST. Supplier normally will be having a normal registration and then pay the outward tax liability under FCM. Point number two, are all the services of postal department taxable? Now, I've written it clearly here that some of the services of postal departments are actually exempt. Now, which are the exempted services of postal department? I have a code word for you to look at. I've also given you an understanding that you can keep it in your head, which is useless services of postal departments are exempted. Now, the code word for you to remember the useless services, BIPO. BIPO, BIPO. That's your term, right? So we always use some code words so that you can have your memory. So when you're in the examination hall, just think about this green color box where I have written BIPO so that you remember it forever. Now, BIPO expands for, B stands for book post, I stands for inland letter, P stands for postcard, O stands for ordinary post less than 10 grams. Book post, inland letters, postcard, and ordinary post less than 10 grams are very rarely used services. So you're sending a book post, you're sending a magazine. Now you're, say, ICAI is sending a magazine to you as a book post. Then in the middle there will be a round post, wrapping, and then there is a seal saying book post. And ICAI is paying say 10 rupees to do the book post. It's one of the cheapest method in which you can send books. Now 10 rupees, would it be plus GST? No GST, no GST because it's exempted. However, all those major services or major income earning services of postal department are actually taxable. What are they? Speed post, parcel post, money order, agency services, etc. All these are examples of taxable services. Right. Now, next question. A speed post is availed by an individual from, I went to a postal department and availed a speed post service. Would it be taxable? Yes. Would it be taxable under FCM or RCM? It will be taxable under FCM. Now, the next question. So, postal department services are taxable under FCM. Even if it is provided to public, it is taxable. Is it postal department service alone that is taxable under FCM? No. Apart from postal department services, there are three more services which are taxable under FCM. What are they? Number two, services of Indian Railways. All the services of Indian Railways which are taxable would be taxable under FCM because it's taxable even if it's provided to public. Number three, services in relation to vessel or aircraft, licensing, repair, any services by government in relation to vessel or aircraft, even to public or businesses are taxable and taxable under FCM. Now, fourth one is transportation of goods or passengers. Now, why am I reading all of these areas which are under FCM? Because I want to tell you that these four services are taxable. I'm trying to take a logical route to it. Now, all these four services are actually services which are taxable even if it's provided to public. Now, what is the structure? When it is provided to public, it is taxable, means I can only bring what charge here? FCM. Now, the next question is that should I separate then? If at all Department of Post is providing services to a business entity, should I make that alone under RCM? They said it will be little difficult for Postal Department to understand whether it's business entity, whether it is public. So let's do one thing. These four services, since it is taxable to public and to public I can only bring FCM, they decided to make it FCM even to business entity. That's what I've written here. Look at it. These are taxable even if it is provided to public. Hence, it is taxable under FCM. Even if these services are provided to business entity, it is still taxed under FCM. So what we can say? Can I say all services to business entities are under RCM? No. So look at it. I know that commercial services to business entities are taxable generally and it is taxable under RCM, but except for these four services. You guys understanding? These four services to business entities also taxable under what charge? FCM. So any question comes in these four, you should understand first point is it's only under FCM that will be taxable. Now let's look at Indian Railway for that example. Indian Railway services are taxable under FCM. Point number one. Now you can see that for Postal Department and Indian Railway, I put it as star mark because I've summarized the entire point here itself in our understanding. So let's look at Indian Railway summary here. Let's try to understand that in full. I've written 2 points. Point number one, Services provided by Indian Railways, including renting of immovable properties, are now taxable under FCM. So you can imagine wherever Indian Railway providing the service and it is taxable, only what will be applicable? FCM only will be applicable. So Indian Railway is liable to pay the taxes. You guys understanding? Okay. Services provided by Indian Railways, including renting of immovable properties, taxable under FCM. Now, next question is, are all services of Indian Railway taxable first of all? Are all services of Indian Railway taxable? Now, I'm saying that the answer is no. Some of the services of Indian Railways are actually exempt. It is not taxable, it is rather exempt. Right? Now, what are the services of Indian Railway which are exempt? You can see there are three segment of services that is available for Indian Railway which are actually exempt. Number one, transportation of passengers other than AC and first class. Number two, platform ticket, waiting room ticket, clock room ticket, battery operated car. Number three, transportation of specified goods, which is random 5. Okay, look at the understanding here. Following services of Indian Railways are exempt for us. Number one, transportation of passengers other than AC and first class. Indian Railways taxable under FCM wherever it is taxable, but anybody booking a ticket, say if as a public, if I book AC ticket and first class ticket, then only it will become taxable. Other than AC and first class means what are the if one included? General ticket, sleeper ticket, passenger tickets in non-AC second class, all the non-AC and all those non-first class, right? All those tickets are actually exempt from GST. There is no GST applicability. Second, they made little more exemption towards some other cases, like they said platform ticket. If somebody wants to enter into the platform, they'll have to buy platform ticket for 15 rupees, no GST. You wanna wait in a waiting room, AC non-AC waiting room, anything, okay, it is exempt because you'll have to pay some 20 rupees 30 rupees for every hour that you are sitting in the waiting room. No GST applicable on that 30 rupees. Cloak room, you want to keep the luggages and then leave for certain hours. There will be a storage charges that is also going to be GST free. Battery operated car, which means in all big railway stations which are having 20-30 platforms. There are in, say for example, Chennai railway station that we have, right? Chennai railway station, you have this option wherein they will let you, okay, in Chennai, they will let you go into a golf cart. You can get into a vehicle. That vehicle will drive you from platform number 1 to platform number 15, carry your luggages as well. You'll have to pay say 100 rupees. Would it be taxable or exempt? This will also be exempt, only 150 rupees. Similarly, you want to avail transportation of goods in Indian Railway. Now, we have learned the same code word in terms of our GTA discussion, wherein we said the previous discussion that we had, the previous video. Now, the transportation of specified goods in Indian Railway, random 5, relief material, agriculture produce, newspapers and magazine, defense and military equipments, organic manure, milk, salt, food grain including flour, pulses and rice. This is random 5 expansion. All these product, if you actually transport by Indian Railway, that is also going to be what? Exempted. Any other product you transport, it is taxable. Whenever it is taxable, it's taxable under FCM, is your understanding. Is that clear, all of you? Can I have a quick yes from all of you if this is clear? Very important point. So I've explained you what is the case of RCM that is applicable. Now you tell me, say, TRAI, Telecom Regulatory Authority of India. Okay, Telecom Ministry is giving 5G spectrum license to Geo. You answer me on the chat box. Would it be taxable under FCM or RCM? 5G license. Would it be taxable under FCM or RCM? So how do you go back to this chart? 5G licenses, is that covered under 243 GW? No. Is it alcoholic liquor? No. It's a supply. It's a supply of service. Is it welfare to public or commercial to business entity? It is given to Geo. It's commercial to business entity. Would it be covered under this first four? No, it is not covered under first four. So it will be taxable under RCM. Right? So Geo is paying 5,000 rupees. Sorry, 5,000 crores, not 5,000 rupees for 5G license. 5,000 crores is being paid by Geo to to telecom department. They will pay 5,000 crores and they will pay GST 18% on this 5,000 crores under reverse charge. Say 900 crore would have been paid under RCM. Are you guys understanding the structural point? Is that clear to all of you? Now, what we're going to do, we have another small entity exemption, etc. to look at. Before that, I'll go into renting of immovable property. This is like a very important point. There's so many questions occasionally they ask. There was an amendment that came in last year. So there are a few things that you have to be carefully understanding and analyzing. I get a lot of questions from this, but I'm telling you that I'm so confident about our chart that I've created here for renting of immovable property. Any question that you put into this chart, you will be able to answer that. So any renting question, I'm not saying just renting of RCM, renting of exemption, renting, reverse charge in some other entry, everything I've put it into one single chart. It's a colorful chart for you to look at, but be with me and try to understand this carefully. So I'm saying that any question on renting, okay, so flats are being given on rent, office spaces are being given on rent. You can know that a lot of real estate renting is a very common activity, common commercial activity. To understand whether renting will be subject to GST, what you have to primarily do, first thing that you do to understand about renting is that you divide the property. What are you giving on rent? You divide the property into two categories. It could be commercial property or it could be residential property. First thing you do what? You divide the property. How do you identify the property separately? So we ask the question, is the property in the question a commercial property or a residential property? What kind of a taxes are they paying to the local authority? When you are doing the building itself, like say when you're drawing the building plan itself, what you're supposed to do, you're supposed to tell the government what kind of property are you trying to construct here. Commercial property means you need to pay a higher building taxes to the local authority. So the property is identifiable as commercial and residential very easily. Only in commercial property you can basically run a business. So it's a commercial property that you're basically giving it on rent. The next point, I'm telling you that the first point that should come into your head in terms of in your mind in terms of your examination understanding is that the moment they use the word commercial property, you should think about in your head saying that it should be always taxable, right? Now if the property is a residential property, if the property in the question is a residential property, then you should remember that this residential property could be sometimes taxable, sometimes exempted. It is understandable, right? I don't want the housing in India to be very costly. So when residential property, somebody is taking this property on rent to stay there, I should give some kind of a relief to them. However, the property is a commercial property. There can always be taxes levied on it because anyway, the recipient of this particular property on rent, he's running some business, he's going to take credits of it. Okay, but I put an asterisk mark because I can still identify when unregistered persons are involved. Some no GST renting could also happen in commercial property. We'll come back to that. First, whenever generally in your question, all your assumption is that commercial properties would be always taxable. Then once you know that it is taxable, the only question that you're fundamentally trying to answer what question once you know it is taxable? Charge only. Would this be taxable under RCM or would this be taxable under FCM? That's all you're trying to answer and then get a clarity on. To get a clarity on this, you ask the next question, who is the supplier who's giving this property on rent? I'm saying that there could be two type of suppliers here for our understanding. The moment the property is a commercial property that is there in the question, the next thing that you have to look at is who's owning this particular property. So I've categorized them into two categories for us to understand what kind of charge will be applicable on that particular property. So I'm asking the question, is the property owned by government or other than government? If the property is owned by government, but when I say government, I will not include Indian Railway because Indian Railway is always under FCM, so I'm just pushing them aside. If the property is owned by government, local authority, now I'm adding little more number of people there. Parliament, state legislative assembly, court or tribunal. Parliament, state legislative assembly, court or tribunal. Why? Because these parliament, state legislative assembly, court or tribunal are actually coming under the same category of government for your charge discussion. So government other than Indian Railways, local authority, parliament, state legislative assembly, court or tribunal. But why would a parliament give their property on rent? Now, parliament might have a canteen space. Inside Parliament, there will be a small grocery space. Parliament is a big, big immobile property complex that we have, right? The new Parliament and all that. Whenever it is given on rent to somebody, we have to ask the question: is the recipient a registered person, or is the recipient an unregistered person? If the recipient is registered, it will be taxable under RCM. If the recipient is unregistered, it will be under FCM. So it's purely on registration, not on turnover. Purely on, do you have a GST number? You don't have. If my person who has taken this particular canteen space on rent, or government had a complex, somebody has taken it on rent and they have a GST number, they pay under RCM. They do not have a GST number, the government entity will have to, not government entity, government will have to, government, local authority. So a lot of questions, they say Panchayat has given a property on rent, commercial property on rent. Then if the recipient is unregistered, then Panchayat will pay under FCM. But if the recipient is registered, most of the question recipient is registered. So you have in your net GST computation question, this company for whom you are computing net GST, they have taken their space on rent. They have taken their space on rent on, they have taken their space on rent on what category? They have taken their space on rent from a local authority, Panchayat municipality. It would be taxable under RCM because they are registered, right? Now other, which means what? The owner of this commercial property is not government. The owner of this property is not government. It is registered person, but it's not government. Now look at in other itself, I'm dividing them two category. I'm saying it could be a private commercial property, like it's owned by Lulu Group, it is owned by Phoenix Group, it is owned by DLF, it is owned by some other group, right? In India, a large part of real estate is still owned by private parties. Then we have to ask the question, is that private party having a GST number? Why would they have a GST number? What if the rent is more than 20 lakh? Then they are liable to register. Now in this category, I'm including Indian Railway. They're saying that, look at the second branch here, I'm talking about this. Registered person is the one who's other than government. It is the registered person who is the one owning this particular immobile property. And they are renting this particular property to any recipient, registered, unregistered, doesn't matter. If a registered person is giving a commercial property on rent, they will have to add GST on the rental. So I am taking a property on rent, 2 lakh is the rent, commercial property. They are of course registered because their rent turnover itself is 24 lakhs in a year. They will give me a bill of 2 lakh plus GST of 36,000. As simple as that. A registered person, including Indian Railway, if they are renting an immobile property, would be taxable under forward charge mechanism. Plus GST would be applicable. Right? Okay. Next. If the supplier is an unregistered person, this is where government has got a little greedy and said, oh, there are unregistered fellows also giving commercial property on rent. Oh, who would be that unregistered fellow who's giving commercial property on rent? Possibility, I have a small commercial space in a tier 2, tier 3, tier 4, tier 5 or a village. Commercial property only. Small commercial property. The rent that I can get is max 1 lakh in a month. Which means if the person who's having a commercial property, they make only 1 lakh rent in a month, their annual turnover from the rental commercial property is only 12 lakh. Up to 20 lakh, they don't need registration. Now the government thinks, can I collect GST on that because it's commercial renting? Then they said, if an unregistered person is renting this to a registered recipient, I want to still collect it under RCM from registered recipient. So that was a amendment that was brought in and said, a commercial property given on rent by an unregistered person to a registered recipient would be under RCM. But then they said, what if this registered recipient has opted for composition? Because if he pays under RCM, he can't take ITC. Because a composition levy scheme person will not have ITC. So they said, if the registered recipient is a composition person, then don't collect any GST. But he's not a composition person, then he pays tax under RCM, is the provision that we have. Right? So commercial property always taxable. Government is the supplier, then recipient is registered RCM, recipient is unregistered FCM. If it is other than government, but it's registered person, including Indian Railway, to any person under FCM, an unregistered person is giving commercial property to a registered person, opted for composition, now GST, not opted for composition, taxable under RCM. So what is that star mark that we had in the beginning? So I'm saying that renting of commercial property could still be not taxable under GST. When? What if the unregistered person is giving commercial property on rent to another unregistered person, a small business guy is taking this particular property on rent to start his business, he has no GST number. Should I ask him to register just because he's taking a commercial property on rent from an unregistered person? I said no. So renting of commercial property by unregistered supplier to another unregistered recipient is not GST is applicable. Similarly, an unregistered person to a composition person also, GST is not applicable. A lot of question comes in. I want you to recap this at your end once again. Look at the second type of property, which is residential property. What if the property in the question is a residential property? Then we have to ask the question, what is the supplier category? Supplier could be registered or unregistered. It doesn't matter. The question is on who is taking residential property on rent. Who will take residential property on rent? Persons like individual capacity people will take, or businesses will take this on rent? Most likely it will be taken on rent by who will take? Most likely it will be taken on rent by individuals, like to stay, personal capacity. Right? It's a flat, it's a residential property, it's a house, it's a flat. However, government says sometimes business also will take. So business is claiming it as an expenditure and they're giving it to their managers to stay. A coaching academy is taking a residential property on rent and then giving the faculties for them to stay there. Then what happens? It will be business expenditure. Do I want to give exemption to that? They said no. So how do I make it? They said a residential property given by any person, doesn't matter registered or unregistered. If it is given to an unregistered person, GST is exempt. However, if it is given to a registered person, irrespective of supplier category, they said if it is given to a registered person, a residential property will be taxable under RCM. The next question. Suppose Reliance Industries is taking a flat on rent for its regional managers to stay. Rent is 1 lakh. Would Reliance be liable to pay GST under RCM? Yes. Mr. Raju is taking a rental flat on rent. 1 lakh is the rent. Would that be taxable? No, it will be exempt. Now, there is one confusion that we have here. What is that confusion? Sometimes what happens, sole proprietors, like the same problem that I've discussed you about a person being an individual and he's also having a business. Sole proprietors are always a little bit of confusion in GST. What is it? Sole proprietors will have two capacity. In my PAN number, I have a personal capacity. In my same PAN number, I have a business capacity. Which means, say if Raju is running a business in his own name, right? Which means he's a sole proprietor. Now, as far as Raju is concerned, in his business, he'll have a lot of expenditure. For his family to stay, he might have taken a flat on rent also. Whatever he claim it as for his businesses would be, if he has taken a residential property for his business, it would be taxable under RCM. But if he has taken his residential property for his personal purpose, it would rather be what? Exempt only. So I would consider that a sole proprietor will have two capacity, an unregistered personal capacity and a registered business capacity. So clarification says that renting of residential property to a registered person being a sole proprietor for personal purpose is still exempt. Okay, so I hope that is clear. Can I have a quick yes if that is clear, all of you? One last point in government before I move to the next point. Can I have a quick yes from all of you? All right, so look at when government is providing services to business entity, what is that I've told you? Government providing services which are commercial services to business entity, these are taxable generally, but they said except for some exemption. Now I'm going to teach you one exemption there. What is that? Small business entity exemption. What is a small business entity? I told you that I coined that word. It is not part of the section, so don't get confused on that. Small business entity exemption is when your last year turnover is less than or equal to the threshold limit for registration, right? Your last year turnover has to be less than or equal to threshold limit for registration. Now, we have seen the same small business entity exemption when it comes to legal services as well. We have seen this. Okay. So small business entity exemption is available even when government is providing services to a small business entity. However, it has some tricky factors to consider inside. What is it? Small business entity exemption is available except for FCM cases and renting of immovable property. What is understanding? I've written a box there for you to understand this. I've written FCM cases and renting of immobile property would be taxable even if the recipient is a small business entity. What is FCM cases? There are 4 cases likely. Suppose Kerala government is giving or Tamil Nadu government is giving a mining license to a small business entity which turnover is only 5 lakh. Would it be taxable or exempt? They can claim small business entity exemption. However, Indian Railways providing AC ticket to the small business entity, would it be exempted? No, because FCM cases, this exemption is not applicable. But all other cases, it can be applicable. Even renting, it is not applicable. That's your conclusion of your overall area that we have learned with respect to government and local authority. I hope that gives you some kind of a clarity into government and local authority. You think about it, we have taken empty number of minutes to explain this particular area. It's huge. Next is 13 and 14. I can actually club together and then teach you. It's a very small area of discussion. Music composer, photographer, or artist, or the like, they are providing temporary transfer or permitting the use or enjoyment of copyright relating to original dramatic, musical, or artistic work to a music company, producer, or the like located in taxable territories, taxable under RCM. What is it? A music composer, photographer, artist, or the like. Music composer, photographer, artist, or the like, providing what service? Temporary transfer or permitting the use or enjoyment of copyright relating to original, dramatic, musical, or artistic work. To music company, producer, or the like located in taxable territory. Simple, straightforward example. You look at, say, Sony Music, 24/7 Music, you take T series music. All these music producing companies will have hundreds and thousands of music composers that will be working with them. Music composers will transfer temporarily their copyright. Now, you must have already heard of Ilayaraja's cases wherein we've understood that the copyright of the original music lies with the music composer as per the agreement, if at all there is an agreement like that. So music composer is the one who's owning this, and they write an agreement with the music company which says we are going to temporarily transfer the copyright of this. You can use it in your movie. Now, every time this music producers is earning some money, they will have to pay a royalty to the music composer. Music composers receiving the royalty would be taxable. Would be taxable under what charge? It would be taxable under reverse charge. Say AR Rahman is getting 1 crore rupees from T series. T series will pay 1 crore to AR Rahman, pay GST directly. Same is the case with photographer or the artist with the producers. One movie, there will be thousands of artists might be working, and the producer will pay the GST on the artist fee under reverse charge. Now, earlier, the same 13th point had 14th point also inside the same entry, which means when the author is providing temporary transfer or permitting the use or enjoyment of copyright relating to their literary work to publisher, that was also included under the earlier point, which means as an author, how the finance of an author would work. An author will write a story, take the copyright of this story with the copyright authority, and then they will let the publisher publish this particular book, and publisher will sell the book, and the percentage of that book revenue will be paid back to the author, right? So the next question is, will the author, when the author is actually temporarily transferring or permitting the use or enjoyment of a copyright relating to original work to the publisher, who is liable to pay the GST to the government? They said it is the publisher who will have to pay the GST. Now, look at one publisher, Penguin Publishers, Rupa Publishers, HarperCollins, all these big publishers will be working with thousands and 10,000s of authors. They'll all be receiving royalty for a very long time as long as their books are in publication or sale. Now, the publisher will pay taxes on the same so that multiple authors need not pay. Government will have an easy collection. That's the thought process. However, why did they separate this author from the earlier cases? Because authors like GTA has been given an option to go for FCM. What the author will have to do? Author will have to give a declaration to the publisher saying that, hey, publisher, since GST department gives me an option to go for FCM, I have opted for FCM. Now, if the author gives a declaration to the publisher that they are under FCM, they can issue an invoice to the publisher by charging GST. What will be the benefit that the author will get if they charge GST from publisher and then pay the taxes under FCM? Now, author will have an outward tax liability for the royalty bill. Say Chetan Bhagat is an author and he's writing a book and HarperCollins is publishing the book. Chetan Bhagat is giving a monthly bill of royalty of 10 lakh rupees. Chetan Bhagat can add GST of 18% on the 10 lakh and collect it from HarperCollins and then pay to the government. At that time, if Chetan Bhagat had any inward supply, he can take input tax credit on the same. That's a benefit that is available. However, there are some conditions that they have kept. Now, author should go and register. Then they have to choose to pay tax under FCM and they have to give bill to the publisher charging GST. They need to give a declaration to the publisher saying that I'm going to charge you GST because I've opted for FCM. But they cannot withdraw this FCM within 1 year from the date of exercising the option. So if the author goes into FCM method, every publisher they are giving a bill for 1 year from the date in which they have opted this, they will be going under FCM only. Is that clear, all of you? Is the case of 13 and 14 clear to you? Let's move to case number 15, which is also a very interesting case to look at. Overseeing committee member of RBI. Overseeing committee member of RBI providing services to RBI will also be taxable under reverse charge mechanism. Now, this is a very interesting area because I can club all this with some other understanding also and then give you multiple clarity on the same. Look at, in the past, I would say long back, it's been years since this exemption has been withdrawn. Earlier, there used to be a provision where services of RBI used to be exempted from GST. However, now it is being taxed. Now, services provided to RBI is taxable, right? Services provided by RBI is also now withdrawn from exemption. Services provided to RBI is also taxable. So we can now say that all the services in and around RBI is now taxable. To whom RBI will provide services to will provide it to other banks most likely. Who will provide services to RBI? Anybody who's giving, who's empaneled as a vendor in RBI, they can provide service to RBI. A restaurant can provide, an accountant firm can provide, an IT company can provide. So anybody who wants to provide services to RBI will also be taxable. Now, there is one person who provides services to RBI will be taxable under RCM. They are called overseeing committee member. Now, there is no overseeing committees meeting that's happening because of insolvency bankruptcy code. I'll tell you what is the reason they set up a overseeing committee. Overseeing committee was there because in the past it was a big headache for RBI that a lot of large credit, like we have seen the case of Vijay Mallya, we have seen the case of Nirav Modi, and a lot of large credits became bad debt for the banking industry as a whole. Whenever banking industry is not having credibility, RBI will interfere and then try to bring back the credibility. So RBI decided we will have a 2 weeks review of this large credit. How much of the banks have given large credit to these big companies? Are they paying back on time? We will have a review of the same. How much is being not paid so that we can take immediate action so that people won't run away with all the money. So RBI decided that we will set up an overseeing committee. We will put all these very reputed senior retired or the ex-bankers to oversee the large credits given by the banks to all of these companies. To ensure that there is all the credits are being reviewed, an overseeing committee was set up. An overseeing committee was set up by RBI, and they provide services to RBI by way of sitting in the meeting and then reviewing the credits, and they will give the bill to RBI. The question is, say for example, there are 5 members in overseeing committee. All of them, every time they sit for a meeting, being paid 1 lakh rupees. These people are not employees of RBI, so these are taxable. Now the next question, should the overseeing committee member should pay GST or RBI should pay GST? They said RBI will pay under reverse charge. So we can conclude it by like this: services provided by RBI is taxable, services provided to RBI is also taxable. One person, overseeing committee member to RBI, is taxable under reverse charge. Understanding? The next case is security lending. Now, before I go into security lending, I would like to give you an overall summary of securities related understanding in GST. This is very important for you to carry in your examination. Now, there are three activities that we are listing in securities. And first of all, I would like to remind you the definition of goods under GST. There was an interesting definition of goods that we have under GST 2, section 232, if I'm not wrong, defines what is goods. So, what is goods basically? Goods are the definition I used to teach in the classes like this. Goods definition has three things included and then two things excluded from it. Goods are every kind of movable property. Number one. So all kind of movable properties are considered to be goods. Second, it includes actionable claims. Later you will understand, but GST will be applicable only on specified actionable claims. Three, it includes growing crops or things attached to the land which can be severed before the supply or contract of supply. Growing crops or plants which can be cut before the contract of supply. At the moment it is immovable, but I will cut it later. These three things are considered to be goods: movable property, actionable claims, growing crops. Two things are excluded from the definition of goods. Number one, securities. Number two, money. Then we went on to the discussion of services, because GST can be applicable for both goods as well as services. What is the definition of service that we have under GST? They said service is nothing but anything other than goods, money, and securities. Right? So we understand that securities are neither goods nor services. However, there's an explanation that is inserted into the service definition which says that, however, facilitating transaction in security is a service. What's the meaning of that? Security is not goods, not service. So what activity will not become a supply? Disposal of security, which means what? A company is giving, what is security? I've given examples on the screen. Now you can look at the screen and then get full understanding. Securities can be shares, debentures, bonds, etc. Disposal of securities, that giving securities for a money, like sale of shares, sale of equity shares, preference shares, bond, debentures, they are not goods, they are not services, no GST. So in the stock market, if I sell an equity, I'm selling Reliance shares today, I'm getting some money. Would that be considered to be a, would that be considered to be a supply? The answer is no, it is not a supply. Would that be subject to GST? No, GST would be applicable. Understanding? Next, facilitating transaction in security. What do you mean by facilitating transaction in security? It is treated as a supply of service. They have given an explanation. Who will facilitate transaction in security? Stock brokers. So somebody wants to purchase, sell shares and all that, you will have to pay a brokerage. Would that brokerage be subject to GST? Yes. They said yes. It will be taxable under what charge? FCM or RCM? We know that it is taxable, FCM or RCM. They said it will be taxable under FCM. Stockbroker is liable to pay the GST. Third one, lending of securities. Lending of securities are done by SEBI's approval. I can lend security, and through SEBI's security lending scheme, through approved intermediaries. There's Zerodha, like any Upstock or Grow, any of these brokers, if they are having this security lending platforms, you can actually lend security for 6 months and earn some money. Is lending of security same as disposal of security? The answer is no. Lending security is also a supply of service. I've given an example. A high net worth individual is lending the stock for a charge. Now, when the securities are lending of securities happening, there will be a lender who's giving, say, I have 1,000 Reliance shares, I'm lending this. Somebody is borrowing the shares from me. Would that be taxable? It will be taxable. It will be taxable under reverse charge. Who will pay? Borrower will pay the GST. So if I'm getting 10,000 rupees as rental charges for 6 months, I will only get 10,000. No GST. GST will be directly paid by the borrower. That's your summary understanding for security lending. Now look at security service. I'll read this. I'll summarize it for you. Right? Let's put a chart together. Let's write the chart also. You can paste it there in your book later. Any person other than body corporate providing security services. What is security services? Only supply of security personnel. I'm giving CCTV. Would that be covered under 17th point for RCM? No. Supply of security personnel. What do you mean by supply of security personnel? In my house, I want 5 security personnel to stand there and then watch, ensure that there is security. An MLA house needs security. A bank needs security. I have two options. I can directly appoint security personnel, pay them on my salary list, or I can go to a security agency and avail security services. I'm talking about security agency providing me security service by way of giving me security personnel. That is the activity that is covered under 17th point here. Any person other than body corporate is providing security service. That is supply of security personnel to a registered person located in taxable territory other than government or local authority, governmental agency registered only for paying TDS under section 51, or a person registered under section 10 would be taxable under RCM. So it's a conditional RCM. There are multiple conditions that we can see here that needs to be satisfied. Supplier should not be a body corporate. Recipient should be a registered person, but should not be these two people. Then it will be under RCM. All other cases, if the supplier is registered, will be under FCM. Now let me write this down for you. A summary chart. Security services. What is security services? Supply of security personnel. Supply of security personnel. First, you decide the supplier category. First, you decide the supplier category. It could be body corporate, other than body corporate. It could be a company, or it could be a partnership firm. It could be an individual. If it's an individual partnership firm, it will be considered to be other than body corporate. If it is body corporate, I can say it is taxable under FCM. I'm assuming provided supplier is registered. Provided supplier is registered. Now the supplier is other than body corporate. Supplier is other than body corporate. Next question. If supplier is other than body corporate, the next question is, who's the recipient? Recipient category. Recipient category could be registered or unregistered. Recipient is unregistered means it will be taxable under FCM. It will be taxable under FCM. Again, the same understanding, provided supplier is registered. However, if the recipient is registered, supplier is other than body corporate and recipient is registered, again I have to ask the question, are they registered only for TDS under section 51 as what tax deductor registration they have? Okay. Number 2, registered only for TDS under section 51. Number 2, opted for composition levy scheme. If they are under normal registration. Let's not say normal registration, we'll say taxpayer. If they are a taxpayer registration, they're a taxpayer and they are opted for composition, or they are a tax deductor registration. If that's the case, again it will be under FCM. Provided supplier is registered. Next, other, which means they are registered, but they're not just a tax deductor registration. They're not opted for composition levy scheme. Here alone, it will be taxable under RCM. Right? Taxable under RCM. Is that clear? Now let's put any example. You will understand the whole concept just if you take them through this. Okay. So let's look at. Okay. So let's look at this. Security services. Suppose Mr. Raju, for his house, he's an unregistered person. For his house, he has taken security persons from a partnership firm. An agency who is a partnership firm has given security person to Mr. Raju, an unregistered person. Now, is it security service? Yes. Is the supplier body corporate? No, it's other than body corporate. Is the recipient registered? No, unregistered. It will be taxable under FCM. Simple. A security agency, which is a private limited company, is providing security personnel to Axis Bank. Private limited company means security agency is a body corporate. It will be under FCM. An individual who's running a security agency has given Infosys 10 security personnel. Other than body corporate, 2 Infosys registered person. Are they registered only for TDS and opted for composition? No, other. It will be Infosys who will have to pay tax under RCM. Is that understandable, everyone? This is how you will make a decision. Is that clear? I hope you guys have copied this and then kept it there so that you have a summary chart available with you. Can I have a quick yes if this is clear? Now let's move to the last case of our discussion, which is renting of motor vehicle. There are multiple areas that can be tested with renting of motor vehicle. When in the later revision, I'll club these points multiple. Right now, I'll give you only the fundamental point and then try to conclude our RCM cases. To have RCM applicable, what is the service I'm talking about? A renting of motor vehicle. Three conditions are to be satisfied for it to be under RCM. Number one, supplier should not be a body corporate. Number two, supplier should not opt for FCM. Even supplier is not a body corporate. If they go for FCM, it will not be under RCM. Second, so supplier should not be a body corporate. Then supplier should not go for FCM. And what is the service that I'm talking about? Renting of motor vehicle designed to carry passengers, only passenger vehicle, where cost of fuel is also part of the consideration. And recipient should be any body corporate. Supplier should not be a body corporate. Supplier should not go for FCM, and recipient should be a body corporate. Then it will be under RCM. So you can see here I've written a chart also for you to look at. Suppose the car rental service is provided by an individual or an HUF or partnership, which means they are not a body corporate. They are renting motor vehicle, which is passenger vehicle. Cost of fuel is also part of the consideration to a body corporate. So an individual is giving car on rent to Infosys, a body corporate. And this individual did not opt to pay tax under FCM. Now this 12% has become what percent now? 18%. It has become 18%, right? So this fellow has not gone for FCM at 18%. And if they are providing services to a body corporate, then the body corporate is going to pay the taxes under reverse charge mechanism. I have a chart for this to understand also. I think page number 48 or something. I've already given a chart, so you can just jump to the chart and then try to understand this. 49 page number. Look at this here. Renting of motor vehicle. What motor vehicle? Passenger vehicle. Cost of fuel is also part of the consideration. So I'm giving you a Swift car for monthly rent. I'm going to bill at the end of the, with or with the driver, without driver, doesn't matter. I'm going to bill you at the end of the month for this much of amount. Is it taxable? Yes. Renting of motor vehicle is taxable. Would it be taxable at 18% or 5%? Right? So renting of motor vehicle, option to the supplier is available in terms of the rate. So renting of motor vehicle has multiple rate applicable. We have 18%, we have 5%. Now, renting of motor vehicle, there is an option to the supplier on the rate. The supplier, if they want full ITC, they can go for 18%. If they want restricted ITC, they can go for 5%. Now, your charge, so renting of motor vehicle is generally taxable, you think about. Now, since you have two rates, if you go for 18%, you can take full ITC, but it will be under FCM only. So if you want to take ITC, it should be under FCM, right? Earlier, this rate was 12%, but GST 2.0 from May exam onwards, it will be considered to be 18%. So if GST is paid under 18%, you get full ITC, but it will be under FCM. Now, if it's under 5%, you have restricted ITC, but sometimes it will be under FCM, sometimes it will be under RCM, like GTA. Now, when it will be under FCM, when it will be under RCM is the question. Now, RCM comes with a condition. What is that? They have not gone for FCM. Second, supplier is not a body corporate. So the one who's giving the car on rent could be an individual, HUF, partnership, etc. Not a body corporate, not a company. Suppose I am at 5%, but I'm a company who's giving this motor vehicle on rent. Then it will be under FCM 5%. If I'm not a company which is giving this particular, if I'm not a company which is giving my motor vehicle on rent, then I have to again ask the question, am I giving it on rent to a company or other than body corporate? So if I'm giving to other than body corporate, say I'm an individual, I'm at 5%, I gave the motor vehicle to another individual, I cannot ask him to pay under RCM. It will be still under FCM. But I'm an individual, I'm at 5%, I'm giving this car on rent to a body corporate, a company. the company will pay at 5% under RCM. That's where I've consolidated the point for you. I said, three conditions satisfied, it will be under RCM. Supplier is not a body corporate. They're providing renting of motor vehicle for passenger. Cost of fuel is part of consideration. Do not charge 18%, not 12 anymore, 18% on the invoice. Three, recipient is a body corporate. Supplier is not a body corporate, recipient is a body corporate. So these small intricate points ensure that you have 100% clarity. Then only you will be able to crack this entire segment of your answers. So if you have 100% clarity on all the RCM cases that we've already discussed, you'll be super good in your overall understanding of GST. Is this clear to all of you? Now what you can do, we can immediately go and jump to our entire question bank. Okay, if you want charge question bank, if you don't have it already, just go to Tax School free resources. I've already uploaded charge question bank there. You can go and solve all the questions in charge relating to reverse charge. Right? Now we need to now go and then try to understand how the net GST computation question can be impacted because of RCM. That's your next discussion, right? Which we're going to do it in the next session only. We've already finished the time allocated, so we'll do that in the next session. So it's going to be a very interesting session next.